Export procedure. What is export? Export is selling of visible and invisible goods and services outside the country against letter of credit, firm contract, or advance payment. Local supplies against letter of credit or contract through banking channel is also deemed as export. Exports are generally done against letter of credit, buying contract, agreement, purchase order and advance payment. Priority sectors in export. More value-added ready-made garments and its accessories. Software, IT-enabled services and ICT products. Pharmaceutical products. Ship and seaworthy trawlers. Shoe and leather products. Jute fiber-made products. Plastic products. Agro and agro-processed products. Furniture. Home textile and terry towel. Home furnishing and luggage. Export procedure. 1. Registration with CCINE to obtain IC. 2. Securing export order from foreign buyer directly or through agent. 3. Receiving export letter of credit from buyer's bank through an advising bank or firm contract from buyer. 4. If the exporter enjoys pre-shipment credit facility in that case. To mark banker's lien on the face of the original export letter of credit. To register in bank's trade finance software. To report through online export monitoring system of central bank. To obtain necessary securities and documents as per sanction terms. Certification of EXP form by authorized dealer bank. Any export outside the country has to be declared by the exporter in the EXP form and must be certified by the authorized dealer bank. To report to online monitoring system of central bank. EXP forms should be checked and ensured that each set of the forms is duly filled in before certification. Full particulars of the export noted in the EXP forms should be recorded in the export register or in bank's trade finance software. AD branch shall not certify any EXP forms unless they become satisfied themselves as to the exporter's ability on following items. 1. Is exporter capable to execute export timely? 2. Is exporter capable to prepare export documents within the stipulated time? 3. Are all arrangements in place for receipt of title to goods like bill of lading, airway bill etc. by the AD on shipment of the underlying goods? 4. Have arrangements been made for realization of export proceeds within the prescribed period? 5. EXP forms should be signed by the exporter or his authorized representative. Supervision and monitoring for shipment of goods by exporter and collection of original bill of lading or airway bill to be ensured. If the exporter does not enjoy pre-shipment credit facility in that case. 1. Shipment of goods by exporter. 2. Preparation of export documents as per terms of the export letter of credit or contract for submission to negotiating bank. 3. Scrutiny or examination of export documents by negotiating bank. If the exporter enjoys pre-shipment credit facilities like BTB letter of credit, PC, and if any other credit facilities to execute the export in that case. 1. BTB letter of credit to be opened. To register in bank's trade finance software and reported through online export monitoring system. 2. PC facility if enjoyed to be allowed. 3. Other loan facility if any enjoyed to be allowed. 4. Acceptance against shipping documents under BTB letter of credit to be given. To be reported through online export monitoring system. 5. Shipping documents under BTB letter of credit to be delivered to exporter for release of goods under BTB letter of credit. Thereafter, the steps are as under. 1. Shipment of goods by exporter. 2. Preparation of export documents as per terms of the export letter of credit or contract for submission to negotiating bank. 3. Scrutiny or examination of export documents by negotiating bank. Submission of export documents or bill by the exporter. 1. Export documents or bill is a set of documents prepared by the exporter after execution of export as per requirement of export letter of credit or sale contract for receiving payment. 2. The exporter will submit the documents to the nominated bank along with the duplicate, triplicate and the quadruplicate copies of the EXP forms. Export documents or bill consist of 1. Financial document i.e. bill of exchange or draft. 2. Commercial documents i.e. invoice, packing list, inspection certificate. 3. Certificate of origin, export license etc. 4. Transport documents i.e. bill of lading, airway bill, truck receipt, railway receipt and postal receipt. 5. Insurance documents and 6. Any other document, as stipulated in the export letter of credit. Scrutiny or examination of export documents. 1. After presentation, the exporter may request the AD to negotiate or to send the documents for collection. 2. Bank will examine or scrutinize the documents with reasonable care whether the documents comply with the terms and conditions of the respective export letter of credit or sale contract. 3. To examine the documents, bank has to follow International Standard Banking Practice outlined in UCP 600 and International Standard Banking Practice, ISBP, for the examination of documents under documentary credit, ICC Publication Number 745. Standard method of checking export documents. Completeness. Examination of documents as to whether all stipulated documents have been submitted. Conformity. Examination of documents with reference to the documentary credit itself including accepted amendments. Consistency. Examination of documents with reference to one another. Compliance. Examination of documents with reference to relevant UCP articles. Some important points to be checked. Letter of credit. 1. Is it related to the documents being examined? 2. Is it expired or not? If it is expired and was available with a nominated bank, presentation was made to such nominated bank on or before the expiry date. 3. Is it operative and available for demand or drawing? 4. Is the amount available under the letter of credit sufficient to cover the demand or drawing? 5. To review any endorsement and determine the accuracy of the letter of credit balance. 6. Whether any transfers have been issued. 7. Determine whether any other demand, is or are presented. Bill of exchange or draft. 1. Is drawn under the correct letter of credit. 2. Appears to be drawn and signed by the beneficiary, the second beneficiary, if the documents are under transfer. 3. Tenor is in accordance with the terms of the credit. 4. Is correctly endorsed, if it is necessary. 5. Amount in words is exactly equal to its amount in figures, and both amounts indicate the currency, as stipulated in the letter of credit. 6. Drawee is as required in the letter of credit. 7. Amount does not exceed the balance of the letter of credit or the amount permissible under the letter of credit. 8. Amount agrees with that of the invoice, unless otherwise stipulated in the credit. Transport documents. 1. It ensures that the full set of original issued is presented. 2. Whether the endorsement as required is done properly. 3. It is duly signed or not. 4. Whether it bears the name of the shipper or his agents. 5. Whether the name of the consignee is as required in the documentary credit. 6. Is there any clause that may speak it unclean? 7. Whether the name of the notifying party if any is mentioned as per terms of the credit. 8. Whether the marking of freight prepaid or freight collect as required by the terms of the credit appears on it. 9. It is not a charter party transport documents, unless it is mentioned in the documentary credit. 10. Whether the description of goods, marks and number, other specification if any are identical to those appearing on other documents. Commercial invoice. 1. Is the invoice issued by the named beneficiary of the credit and his address is as shown in the credit. 2. Is the invoice issued in the named applicant of the credit and his address is as shown in the credit. 3. The description of the goods must correspond with the description in the credit. 4. Invoice value of the goods, unit price, quantities agree with the letter of credit. 5. Shipping marks and number on the invoice if shown are consistent with those appearing on any other stipulated documents. 6. Is the invoice signed or otherwise authenticated, if required by the credit. 7. Required number of originals or copies are presented or not. 8. Shows all discounts or deductions as required in the credit. 9. Is not marked provisional pro forma or similar expression. 10. If the credit prohibits partial shipment, invoice value should be for the full value of the credit or allowable by the UCP 600. 11. Quantity of goods, weights, and measurements shown on the invoice are consistent with those appearing on any other stipulated documents. 12. If certification is required on the commercial invoice, whether it is done or not. Insurance documents. 1. To be issued in the form as required by the credit, where necessary, endorsement by the party to receive loss cover is allowed. 2. If the credit requires an insurance policy, in that case insurance certificate or cover note not acceptable. 3. If the credit requires an insurance certificate, but submitted insurance policy, is acceptable. 4. Cover note is acceptable only if it is expressly authorized in the credit. 5. All originals are to be presented, if issued more than 1 copies. 6. It is required to issue in the currency and for the amount as indicated in the credit. If amount is not mentioned, in that case minimum insurance amount will be 110%. 7. Whether the insurance documents relates to the invoiced goods and transport details. 8. Are specific risks and or clauses required by the credit covered or not. 9. If the credit requires all risk coverage, Any all risks clause or notation is acceptable. Packing list. 1. It must be titled as packing list. 2. It must be related to invoiced goods. 3. Banks are not responsible for checking mathematical calculations of extensions or additions of the packing list. Certificate of origin. 1. It is required to be signed, dated, and properly titled. 2. Whether the certificate indicates the country of origin is required by the credit. 3. It must be issued by the named concern or party as stipulated in the credit. 4. It must be related to the invoiced goods. Weight certificate or list. 1. If the credit stipulates a weight certificate, it must be so titled, signed, and dated. 2. If the credit stipulates a weight list, it should be titled, but need not be signed and dated, unless asked by the credit. 3. It states the weight of the invoiced goods only. 4. The weights of the weight certificate or list correspond with the weight of the transport documents and/or invoice. 5. Banks are not responsible for checking mathematical calculations of extensions or additions of the weight certificate or list. Inspection certificate. 1. Whether it is properly titled, signed, and dated. 2. It must be related to the invoiced goods. 3. If the credit requires a clean report findings that the documents presented is so titled, signed, and dated. 4. It complies with the inspection requirements contained in the credit, if any. Statements referring to the condition of the goods is to be disregarded, unless otherwise stipulated in the credit. 5. Unless otherwise stipulated in the credit, statements that only related to sample or samples of goods inspected are acceptable. Negotiation. Negotiation means purchase of documents by the nominated bank under a complying presentation by advancing or agreeing to advance funds to the beneficiary on or before the banking day on which reimbursement is due to the nominated bank. Procedure to effect payment. If the documents are discrepant, in that case, 1. Bank should ask exporter to resolve the discrepancies. 2. If the discrepancies are resolved, bank may negotiate the export bills. 3. If the discrepancies are not resolved, bank may negotiate the export bills under reserve obtaining clearance for negotiation from the export letter of credit issuing bank about discrepancies and indemnity from the exporter, beneficiary of bill. Sending of documents for payment. After negotiation or receipt, the documents are to be sent for payment or on collection basis. For this purpose, a forwarding schedule to be prepared. Specific instruction mentioning account number and bank name where payment to be remitted by the paying bank has to be given. 2. Authorized officers must sign on the forwarding schedule. Endorsement of documents. Documents, especially the bill of exchange, draft, and full set. Bill of lading to be endorsed in favor of letter of credit issuing bank or as per instruction in the credit. Dispatch of documents. After proper endorsement and forwarding schedule duly filled in, the export documents are to be dispatched to the letter of credit issuing bank or as per instruction of the credit through bank's enlisted or nominated courier or express mail service. Maintenance of record. Export bill-wise entry to be made in the export bill register. Documentation. 1. Branch shall obtain usual charge documents from the exporter, especially the general indemnity from the client. 2. Branch may also obtain specific indemnity from the exporter against discrepancy in the export bill. Follow up for repatriation of export proceeds. After dispatch of the documents, branch shall make necessary follow-up and correspondence to realize or repatriate the proceeds in time. Correspondence will continue till repatriation of the proceeds. As per guidelines for foreign exchange transaction, proceeds should be repatriated within 120 days of the export. If the proceeds are not repatriated within the prescribed period, AD should report that to central bank. Accounting entries. While opening BTB letter of credit. Debit customer's liability account BTB letter of credit, at BC selling rate. Credit banker's liability account BTB letter of credit. At the time of issuing acceptance against BTB letter of credit and delivery of documents under BTB letter of credit to exporter. Debit banker's liability account BTB letter of credit. Credit customer's liability account BTB letter of credit. At BC selling rate of the date of opening BTB letter of credit. If customer does not avail EDF facility. Debit customer's liability account ABP. Credit banker's liability account ABP. If customer avails EDF facility. Debit EDF loan account. Credit Hogen account Treasury Division. While negotiating shipping documents under master letter of credit. Debit FDBP account, at TT doc rate. Credit customer's deposit account. Negotiated amount is calculated generally considering 90% of bill value minus liabilities under BTB letter of credit, PC, ERQ, and any other liabilities or obligations. At the time of settlement of the repatriated proceeds. Debit Nostro account of Ho Treasury Division, at TT clean rate. Credit respective branch general account. This entry is made by Ho Treasury Div upon credit of export bill value in the Nostro account. At this stage, branch appropriated the proceeds getting in its gen account as under. Debit respective branch general account, OD site rate. Credit FDBP account. Credit PC account. Credit ERQ account. Credit FSPAR account for payment of BTB letter of credit liabilities. Credit other loan accounts, if any. Credit sundry deposit account fund build up, if sanction term permits. Credit sundry deposit account central fund, at 0.3%. Credit sundry deposit account source tax on RMG, at 0.5%. Credit income account documents handling charge. Credit income account exchange gain. Credit exporters deposit account, residual amount. While allowing payment of BTB liabilities. Debit FSPAR account, at TT clean rate. Credit HOGEN account Treasury Division. For payment government dues against export proceed. Debit sundry deposit account central fund, at 0.3%. Debit sundry deposit account source tax on RMG, at 0.5%. Credit Ho general account, financial accounting division. Types of settlement. A settlement by payments. 1. The seller, exporter, sends the documents evidencing the shipment to the bank where the credit is available, i.e. the nominated bank. 2. If the documents are found to submit meeting all the terms of the letter of credit, the bank makes payment. 3. The nominated bank then sends the documents to the issuing bank. 4. If the issuing bank, after checking that documents, found presented meeting requirements of the letter of credit, makes reimbursement in the pre-agreed manner. 5. The letter of credit issuing bank then realizes the reimbursement from the buyer, importer. B. Settlement by acceptance. 1. The seller, exporter, sends the documents evidencing the shipment to the bank where the credit is available, the accepting bank, accompanied by a draft drawn on the bank with the specified tenure, say 90 days. 2. After checking that documents, if found to present as per credit requirements, the bank accepts the draft and returns it to the seller, exporter. 3. The accepting bank then sends the documents to the issuing bank stating that it has accepted the draft. 4. The issuing bank, after checking that documents, if found presented as per terms of the credit, makes reimbursement at maturity of the draft in pre-agreed manner. 5. The issuing bank then realizes the reimbursement from the buyer, importer. C. Settlement by negotiation. 1. The seller, exporter, presents the documents evidencing shipment where the credit is available for negotiation, the negotiating bank. 2. After checking the documents, if found presented as per credit terms, the negotiating bank remits the fund to the beneficiary of the draft. 3. The negotiating bank then sends the documents and draft to the issuing bank. 4. The issuing bank, after checking the documents and the draft, if found to present as per credit requirements, makes reimbursement in a pre-agreed manner. 5. The issuing bank then realizes the reimbursement from the buyer, importer. Bill of exchange. A bill of exchange is an instruction of the exporter, drawer, to the importer or the importer's bank to make payment of the amount mentioned in it. Parties to bill of exchange: drawer and drawee. Types of bill of exchange. 1. Site, demand bill, and 2. Usance bill, time bill. Site bill. A bill of exchange is termed as site, if the drawee is to make payment immediately on presentation of the bill to him. Usance bill. A bill of exchange is usance, if the drawee is to make payment after a specific period, 30 days, 90 days, 120 days etc., as mentioned on the face of the bill. A usance bill may be after-date bill or after-site bill. For an after-date bill, the due date is calculated from the date appearing on the face of bill or transport documents, indication of which is given in the respective letter of credit. For an after-site bill, the due date is calculated from the date it is cited, i.e. accepted by the drawee. Charging of overdue interest. If the drawee fails to settle claim against bill on due date, then the payment against that bill is considered as overdue bill. Charging of interest on overdue bill for the overdue period is done in a pre-agreed manner since detailed in the respective letter of credit.